I worked hard to educate women who follow me online or my friends in real life, like, what does it mean to be an accredited investor? What does it mean to invest in venture capital? Like, let's just break down some of the barriers to understanding, because then people can make an informed decision if it's right for them, if it's right for their risk tolerance, for their timeline, all those sorts of things.
Welcome to another episode of Forging the Future, and I'm here with Carrie Colbert from Curate Capital. Welcome,
Hi,
Carrie.
Chris. It's an honor to be here with you today.
Yeah, thanks for coming. So you've had a long career at some pretty big businesses and various leadership roles in oil and gas. So maybe tell me a little bit about your history.
Sure. I certainly had a non-typical path to get where I am today. I'm from a small town in the Texas Panhandle, first in my family to go to college. I studied petroleum engineering because I got the best scholarships in that realm, and then graduated the top of my class of engineering and came to Houston for an oil and gas job back in the last century. 1999 is when I graduated undergrad. And so I came to Houston.
And who was that with, actually?
I worked for Anadarko, out of school, yes, for 5 years. And then after that, I was recruited to Hilcorp Energy, which now is the largest privately held oil and gas company in the country, I believe. I've been gone for 7 or so years, but I was there for a dozen years. And, truthfully, the oil and gas industry was never necessarily my passion, what really got me up in the morning and going. However, I was fortunate to have a long career there. And the really life-changing part of me was getting to work at Hilcorp for that dozen or so years, because it was run so entrepreneurially. Even though it became a very big company, the founder, who was the sole owner, we had no investors or no, kind of outside stakeholders, he really ran it in such an entrepreneurial way. And really, that was life-changing for me, both in terms of my financial well-being, but also in terms of how I thought about businesses and how I thought about, the power of aligning incentives within an organization and how you could really create a structure that got everyone rallied around, a common cause, and because everyone benefited when the company did well.
Sure. And who is that? Who owned that company?
Jeff Hildebrand. So
and
Jeff
you joined when it was only like a couple $100 million.
Yes. Right? So I actually remember this little tidbit. I was hired to run the reserves side of the business. So that's basically, in the oil and gas terms, it's kind of like the balance sheet for an oil and gas company. So the reserve report basically says, what are all these, oil and gas assets under the ground? What are they worth today? And so you run this report, and based on the pricing and the current commodity environment, it spits out a value of those reserves. And I remember we were running different pricing sensitivities. We were like, can we get the value to be $100 million? Right. And if I remember correctly, the first time I was there, it didn't quite get to $100 million. So we were under $100 million in value, and, I think a couple hundred employees when I was there. And when I left 12 years later, gosh, we were multiple billions in value and several thousand employees.
That was a lot of growth to be a part of.
It was. And, for me personally, I enjoyed the early days where it was like, the individual efforts were really rewarded. And, we did so much, to really grow the company. And so it was an exciting time to be there.
So he fostered an entrepreneurial culture.
Yes. It was this concept of open book management where everyone knew the numbers and knew how my actions or their actions, your actions, anyone's actions, we knew how we could affect that bottom line. And if we affected it, we knew that we would personally benefit from it. So it was really an exciting thing to be a part of.
And did you end up toward the end, I thought I heard maybe you ran investor relations or something like that. Is that right?
So my undergrad was in petroleum engineering, but while I was there, I also got my MBA. And so then I ran investor relations, finance, strategic planning, kind of more on that side of the business. So while we didn't have outside investors, we did have a credit facility, a bank group with about 17, 18, 20 banks. And then we worked with the rating agencies in New York and that sort of thing. So, so got to kind of see the business from all angles and from all sizes. It changed a lot while I was there. And ultimately decided that I was super thankful and grateful for my time there and the experiences and the lessons learned. But then I was excited to take that same concept and try to apply it to something that resonated with me more personally. I wasn't sure what that was when I walked away. I walked away not knowing what the future would hold, but determined to make it, one, something that was entrepreneurial, and then two, something that resonated with me personally in terms of, my values and passions and such.
Interesting.
Yeah.
Yeah, I actually interned at IBM down at NASA, back in the day when I was going to college, and learned a lot at IBM. It was super interesting working with the shuttle program and space and everything. But and back then IBM was the gold standard for companies, right? And I remember when I left to start consulting, off on my own, right? I was married, had kids. And my family, I think, thought I was a little crazy. I quit IBM. Who quits IBM? So you quit Hilbrand, and what? How did you take that first leap, or what did you push you to do that?
It was certainly leaving a place of comfort, that's for sure. Left not only the salary, but regular bonuses. We all had equity in the company to some extent, and so that included monthly cash flow, checks from that, benefits, vacation, all those things that come with a kind of salaried corporate position. Right. So it was very scary. Prior to leaving, probably because I was getting a little burned out and trying to, do things that I was passionate about, I kind of sort of accidentally gotten into the influencer space. I think before that word was even a buzzword. I was just traveling a lot and having a good life. And went to a lot of fashion shows around the world, a lot of really great destinations around the world. So I was just kind of posting pictures of that and very organically grew a decent sized following on social media. And I only mentioned that because, one, it wasn't planned or intentional necessarily, but then two, it played such a pivotal role in where I am today, in that those people who have been following for a decade plus in many cases ultimately became my best source of both deal flow and investor dollars. So as I began to think about Curate Capital and talk about it very kind of organically and naturally, that's, what would happen. I would have women reaching out saying, hey, I want to be a part of this. But backing up to before the Curate Capital days. So I was doing a little influencing, doing brand deals and all that sort of stuff, doing, travel partnerships, fashion partnerships, all that sort of fun stuff. But at the same time, I'm kind of pondering in the back of my mind, what's next? What do I really want, to do with my time and my money? And very naturally started connecting with founders that I liked on Instagram, online, whatever, or they were following me or I was following their brand, and started just investing my own money into female-founded businesses. Right. And so I did that. So you
started doing some angel investing
I did. Okay. And so I did that for about 5 years before I even thought about starting a fund. And someone framed it this way in a recent podcast I recorded. She was like, well, you were kind of proving your MVP during that time. I said, well, yeah, kind of, because 3 important things happened. One, I was having great fun, and fun was not a word that I really associated with my past professional life. So it was good to be having fun in what I was doing. So great fun. Number 2, having great results, had a small portfolio of companies and had a, really, in my mind, impressive track record during that 5 years in terms of kind of the returns generated. And then 3, and what ultimately prompted me to start a fund was just this incredible deal flow. So great fun, great results, and great deal flow. I just realized there were so many incredible businesses. And on the female founder side, what happens is they get so few dollars. Women get less than 2% of all VC dollars still in this country, which is, of course, horrible.
And the stat for how many founders are women?
Yeah. So, there are different reports you can pull from, but generally speaking, female founders make up about 45% of the startup population. So almost half.
And they get less than 2%.
Yeah.
That's crazy.
Now, what I find a little off-putting, though, is, too many people are focused on, whoa, this is bad, we must change this. And the way I saw it, I as an individual couldn't shift that or change that necessarily. But the way I look at that is that creates a great opportunity arbitrage because generally speaking, these are underfunded businesses and oftentimes they're overperforming. And because of relationships in the space, I had somewhat of an inside track. So for me, it was a value proposition, more so than charity or philanthropy or like, oh gosh, I feel bad for these people. Let me give them some money. No. This just makes good business sense from a pure, numbers and returns basis.
Yeah, I mean, I was thinking back on my early days of angel investing and some of the advice that I was given about, invest in what you know.
Yeah.
And you want to be the smart money. Smart money meaning you can give more than just money, value to a startup, but you can share your experience and your network, et cetera. And I remember a woman founder I met at an angel summit. And she had a rental clothing business in New York City or something like that. And I had that, it was really early in my investment. I had this back in my head. I thought, I told her, I'm actually not the investor for you because I don't know anything about what really New York investing or the potential for, clothing rental.
Yeah.
But I think this creates some unconscious bias. I think this advice, I understand that it's coming from a good place about smart money, but then you can see why, if the VC space is really heavily dominated by, male VCs like myself, who also don't have like the background to judge whether, this candle business or this clothing business or this woman-focused business actually has I think of candles because of Gwyneth Paltrow recently, right, and Goop exactly. and everything, but it's like, I just don't know how to evaluate that, and I would feel like, I'm not there I don't have the ability to support a woman founder with that.
Right.
But it's not that I'm being biased, but I'm unconsciously, it ends up happening. You can see why the funding isn't coming through, right?
Right. And so you bring up a good point. It's not a simple solution. It's a more holistic approach to the ecosystem, which has to shift over time. As I was fundraising, I had one of my investors who I've known for years, is a very successful businessman. I have the utmost respect for him. And he sat across the table and looked me in the eye and said, but Carrie, I don't get, why is this business, for example, one that sells party goods, he's like, why is this a big deal? I said, well, Mike, I looked him right in the eye. I said, one, they're going to do X million dollars top line this year. Two, that's exactly my point. I don't need for you to understand the ins and outs of the business. I need you to invest in me because I do understand these women. I understand them personally. I understand their business because oftentimes I am the target customer, the target demographic, where I'm at least tangentially close enough. I'm kind of aging out of some of these, but, I'm at least, close enough in the whole, sphere of what they're doing, whether it's that they resonate with me personally or, I resonate with their business. I mean, there's some commonality there from which we can build our relationship there. I know, oh yes, she's serving a gap in the market, or, oh yes, I've looked for a solution to this as well, and she's building one. So, that's what I say, that technically we are industry agnostic, but rather we are focused on businesses by women for women. So like women building the solutions that other women need and want in the marketplace.
Did it make it easier or harder, for example? Because on the one hand, I can see you've compounded the problem by saying, you know what, I'm not just a woman founder building a business. I'm a fund that focuses only on multiple women businesses, right?
Yeah.
And you should give me money.
Yeah,
right?
yeah.
I mean, I like the other side of that is if I was, if you were coming to me and it's like, it's an area I don't really understand, and I'm going to trust you to figure that out because I can see I can benefit from your knowledge, but I don't have to do all the vetting. So I'm curious. I mean,
good question and good point. And first of all, I never intend to be exclusionary. For me, it's just that happened to be where I could relate to the founders. It's where I had an inside track through extensive relationships in the space.
Right.
And so for me, that was just kind of my differentiating factor. However, what's been great is that we do have, male investors as well and male people in our ecosystem. And specifically, we could go ahead and jump into the topic of Softeq. That's why I wanted to align myself with your organization because I don't have the skills and expertise that you and your people have. And so while I may understand my founders and executives that I work with in their businesses, sometimes they need help in areas that I can't provide that help. So as a smallish fund where I'm unable to kind of build out a team myself and heck, I don't know if I would want to go that route. I really try to align myself with people who have needed skills and expertise sets that will complement mine and be an added benefit to the founders that we work with.
Interesting. Yeah, actually, we have collaborated. Softeq Venture Fund invested in Curate Capital. I think something around $2 million, right?
Yes.
Which makes you, I think, the highest paid guest on this show. So,
well, thank you for that notoriety there.
But you're also working with us, and yeah, I think there are parallels from the Softeq Venture Fund and Studio, where we're trying to de-risk investment for businesses that are hardware and software and technology based, where an investor also similarly doesn't have the understanding of, does this tech actually work? Does the MVP work? The proof of concept, is it scalable? How do they evaluate the technology? And that's part of what we do in the studio, is we get under the hood of those founders and those technologies, and then we can tell the investors, okay, now here's where you should write your bigger check.
Right.
Once we get under that, but sometimes it's even hard for us to know in the technology space, right? You don't, even in our personal lives, I feel sorry for people actually using technology, because I get frustrated sometimes, and I know a lot about it.
You understand it, yes.
Right. So if you're an investor and you want to invest in technology, and I think the good news is, in specifically in Houston, there was a lot of oil and gas investment. A lot of people were much more willing to put a lot of money in a hole in the ground,
right,
than they were ready to put money into a technology business or a women-owned business or something like that. So I think things have shifted a little bit.
Yes.
Have you seen that as well? Or?
The shift is happening, right? I won't say that we've completely landed on the other side of that shift, but I think there is a movement happening where even, people that are seasoned in the oil and gas industry are looking for, other places to diversify, their investment portfolio, or, just to get some exposure to some different areas. Hopping back to the subject of the venture studio, what I love about what you're doing, besides the tech development and, assurance, all that stuff that you can do during that 90 days or so that you have with your cohorts of founders. I also love that it de-risk it from the standpoint that you get to know the people better. I think there's a lot of push in the VC space, particularly if we're talking about historically underrepresented founders, whether that be women or minorities or whatever. I've seen a lot of funds out there saying, we don't even want warm intros. We want only cold intros, do this kind of blind form on our site. And I get that. And I'm, sure, applaud them for taking that route if that works for them. For me personally, though, it's such a marriage between an investor and a founder that I really, need to de-risk that investment before I write a big check. And for me, that's either comes from a longstanding relationship or getting the chance to see them in, a studio like yours that allows us to see, well, how do they handle pressure? How do they handle conflict or, tough times or setbacks or whatever? Are they going to be able to navigate, the business from a, call it emotional intelligence standpoint, as well as, obviously handle the data and the numbers and the technology and all that, but how do they handle themselves under pressure? And is this someone I want to be, quote unquote, married to from a business sense? So
yeah, a lot of
another
investors
huge
have
advantage.
They have that qualification that the top three things they invest in are people, people, and people, right?
Yeah.
And if you don't have that time with them, you don't get a good sense of who they are and can they build a company that's actually scalable. I think one of the most successful cohorts I was reading recently where they had three unicorns in 5 or 10 companies, something like that they picked. And the interesting thing about it is that each of those 3 unicorns pivoted during their growth, and none of them were doing what they came into the accelerator or studio or cohort to build.
Interesting.
Right? So it was all about what the founders were able to do.
Right. And anyone can come across polished in a 30-minute call or even a follow-up, hour-long due diligence call. But that's not really the true judge of how they're going to be, in the tough times and, whether or not they're able to build and scale a business. So what you're doing is really, critical to de-risking our investments down the road.
Right. Yeah, it's a lot of, basically 3 months of due diligence, but
that's right.
Beneficial for the startups, beneficial for the investors as well, right? So, what do you think some of the challenges are for women in VC as an investor? Do you have a lot of women VCs in the fund, or what's the mix of LPs in your own fund?
Yeah, great question. So when I started out, decided to start a fund back up to early 2020.
Yeah.
This is great. I'm seeing so many deals I don't want to miss out on. Let's just raise a small fund because that'll be nice and easy. Well, spoiler alert, it's just as hard, I think, now to raise a small fund as a big fund. You're just pulling from different pockets. But nevertheless, originally, I very naively thought, well, I'll just go out to, so-and-so, Bill, Bob, Joe, whatever guy from my oil and gas network, and we'll get, $500K here, $1 million here and there. Well, in hindsight, I'm kind of glad that didn't necessarily work out right away in the early days, because what actually happened was a bit of a groundswell, if you will, of women investing. And so I very intentionally set my minimum investment as low as practically possible. And I worked hard to educate women who follow me online or my friends in real life, like, what does it mean to be an accredited investor? What does it mean to invest in venture capital? Like, let's just break down some of the barriers to understanding, because then people can make an informed decision if it's right for them, if it's right for their risk tolerance, for their timeline, all those sorts of things. But when people just don't understand these terms, when it's kind of thought of as this like black box out there that only a few people have access to and understand, well, then that precludes, the nature of, the investor demographics to change. And so I would just very naturally talk about, like, what is an accredited investor? People thought that was something you had to apply for, or some designation bestowed upon you or something.
Go to school for or something like that, right?
Oh, no. Like, okay.
Get accredited.
Right. No, it just means that you either make this much a year or you have this much net worth. And you're like, oh, well, I meet those standards. Well, great. You can invest with me then. And so really, I just kind of took that approach about just very naturally talking about the businesses. And, people say, oh, I'm a customer of that. I buy that all the time. Like, can I invest with you? And so as it turns out, our cap table is about 80% women.
Oh, really?
Just shy of 80% women. And over half are first-time venture investors. So, the reason I like that, again, is not from a, exclusionary, discriminatory perspective, but I think of it as this really virtuous ecosystem, right? That's all accretive. So we've got, of course, me, and then we've got all these great founders that we invest in, but they're building the products and services. And then these LPs and others in our community are the customers and the users of these products and companies and brands and services and all. So we just build upon, one another and help one another out in that way.
Well, that's great. I mean, it's really almost like an educational aspect of it. Although, I'm sure both of us would support having, more male LPs in there as well, because they also need to get some education about this space, which is another reason why we partnered. But I'm really proud of the fact, even at our own fund and studio, that Houston's like I believe the most diverse city in the U.S.
Right.
And so we didn't target diversity or not a diversity fund.
Yeah.
But when and we've gone through, we'll have about almost 50 companies going through by the end of this year. And when we ran the statistics, I was pleasantly surprised that the demographics matched the diversity of the economy, even though we're not really just pulling exclusively from Texas, right? So
not at all.
We're getting companies apply from the West Coast, East Coast, Texas, as far away as Egypt and Bahrain, so very, very diverse. But we have, I think, 50% at least women founders and underrepresented founders. And it's just natural. And that's really the way it should work.
Right.
You're actually not trying to prevent it, which is what's happened in the past, right? Oh, you don't look like me, so I'm not going to invest in your company, right?
Yeah.
And so hopefully we'll get to that point, overall, where, there aren't those unconscious barriers to founders that, aren't traditionally what Silicon Valley has invested in the past.
Well, I think I've been really impressed with that from even an outsider's perspective, Chris, the way you have drawn from such a diverse geographic area, such a diverse background area, different industries, all that. And I really think it speaks to the different perspective you're taking and that we generally here in Houston may have, compared to the conventional wisdom and the traditional ways of doing things on the East Coast or West Coast. They're so ingrained of just this is the way we think about things. This is the way we do things. Whereas y'all are shaking things up a bit, and we take a bit of a non-conventional approach in some ways. And, I've loved seeing Silicon Valley companies apply to your program and get in and talk about afterwards the value that they gain through that. And so really, you're onto something really special here, Chris.
Well, thank you. Seems to be working. And actually, we just got the survey back from the last cohort, and we ended up with a 100% NPS score,
nice,
which is pretty rare, right? Because you have to get a rating of somewhere between 8 and 10 to actually have a 100%. So we had no in-betweens, no detractors. And so, and we've had companies come through from I think all 3 of the major accelerators, 500 Global, Y Combinator, et cetera.
Yeah.
So I think part of that is also, since we're builders, a lot of those accelerators don't have the engineering side of it. Right. So we understand the hardware and the software, and they get that benefit from coming through our program that they don't get from some of the others.
Right. It's very tactical, hands-on help. Also, I've heard feedback from the companies that, they do feel like it's small enough that they are getting a lot of one-on-one support. It's not this, kind of mass program that some of the others are taking that approach these days, where they're running hundreds of companies through every program.
I think the last YC batch was like 230.
Yes.
And I heard that some of them take exactly 2 minutes to decide whether you're in or not, or some crazy little number, even if it was 5 or 10. But it's just, they have to make a decision of whether they're in or out, just very fast. And we interview companies 3-4 times actually,
right?
And we've kept our batches small, where we were doing 10 per quarter. Now we're looking at maybe we'll do 20 per half year,
right?
And we're trying to iterate and learn each time we go through the program.
Well, it's small enough then that you can help every company, and they can also connect with one another, and it is really much more hands-on than some of the other models I've seen in the industry.
Mm-hmm. Yeah. So you're already doing a lot for women founders in this space, and educating a lot of people on how to become investors. And then we're both trying to build an ecosystem in Houston, right? So as these startup founders come in, build their company, hopefully, exit in some way, have revenue of their own and investment capital of their own, to then stay here in Houston and invest in their own startups. Right? That's what we're trying to get going. Is there anything else that we can be doing to encourage that to building this community here in Houston? Yeah,
I think it's more of exactly the same that you're doing, right? Mm-hmm. It's not just the capital, but also the resources, the mentorship, the guidance. Some of these women have great ideas, but they maybe don't know how to build a team, or they don't know, what to do on the tech side of it, or whatever. So certainly the capital is needed, and much merited in many cases. And so I don't want to dismiss that because it's not always just the soft thing. But I think also what you're doing is really empowering them with the information and the knowledge and the resources to really drive them well beyond the studio, and to help guide them into their future. So I think it's just more resources and being there to support them more. One thing that I struggle with is there's so many businesses who reach out for funding, and I can't fund them all.
Right.
But how can we get them in our ecosystem and help them kind of get up their own curve to success faster, whether that includes an investment from us or not. How do we kind of share this knowledge base and experience base that we're all kind of developing together? We have about a dozen portfolio companies now. We just closed our first fund, which, by the way, was about 50% oversubscribed.
Nice.
We had a goal of 10 million. We closed at 15, and are looking to do something even bigger next time. So we'll be, doing our second one sooner rather than later at the rate this is going. And so, but I just think there's so much to be done. The sky's really the limit. And I love to see the collaborative spirit that we're taking, because there's so much more we can accomplish together. This doesn't need to be the Carrie show or the Softeq show or anything.
Right.
There are just so many wonderful resources. And so, I'm really appreciative of being able to lean on your resources, and hopefully we in turn can help as well, because we don't have to do this alone. The whole thing is to help these founders, to help these companies, ultimately be successful, and then they can give back or invest back, as they see fit. So, one success is really all of our successes.
Yeah, exactly. I think some things have become, or some companies act very siloed.
Yes.
And our goal is to be very collaborative, and not everything has to be transactional.
Yep.
And the tide raises all boats, right?
Absolutely.
So I think this is really an important, part of building the ecosystem out.
It's an exciting time to be in Houston, and an exciting time to be doing what we were doing here in Houston.
Finally, it's coming together.
Yes, I'm sure you saw many years where this wasn't the case.
There was nothing available when I started, right? So,
well, I really applaud you for being such a visionary to have the idea to do something like this, because it was sorely needed and missing in the ecosystem here. So kudos to you and your team.
Well, thank you. All right. How can people find and connect with you?
Sure. On Instagram, it's just @CarrieC. One of my claim to fame, side note, was that I was on Instagram the week it launched. So that's why I have such a short username, @CarrieC.
Nice.
Really not that impressive, but who knew it was going to turn into what it was?
You probably would have preferred to have the first check in there.
That's right. I just like pretty pictures. I heard there was this new photo sharing app, so I hopped on it. But anyway, so that's where I am on Instagram. For Curate Capital, it's just @curate.capital, and that's our website and everything, curate.capital.
Anything that we should look forward to from Curate in the near term?
Certainly. We've got several new investments we've made that we have not announced yet. So we'll be rolling those out over the next few weeks. We're also having a celebration in a few months to celebrate the closing of our first fund. So that'll be nice. It was a lot of blood, sweat, and tears that went into raising that first fund. So we're ready to celebrate a little bit. And then, getting involved with your fall cohort, that'll be a big highlight for us. I've got a preview of a few of the companies, and they have us super excited. And then moving on from there, looking to even bigger and better things together.
That's great.
Yeah.
All right, Carrie. So one of the things I like to do is wear geeky socks and different socks. I got my nerd socks on today, and
I've noticed that before, by the way, Chris.
Oh yeah, well,
I've taken note.
We like to try to have fun, right?
Yes.
So work hard, play harder. And given that you're such a Wonder Woman, I got you a pair of Wonder Woman socks, and they even have a little cape to them. So I don't know if that it might not fit your normal style, but hey, you can kind of venture
amazing.
off and.
No one has ever given me Wonder Woman socks before.
There you go.
So you have just, gone up even further in my book, Chris.
Well, thanks for coming on the show.
Gift.
Oh, sure, definitely.
Oh, thank you so much.